Warren Buffett's Berkshire Hathaway is rooted in American economics. In today's video, we discuss just how much this stock can grow over the long term and why it's one of the most undervalued businesses in the world. We start by exploring the company's vast portfolio of subsidiaries and investments. Understanding Berkshire's ecosystem of businesses is a near impossible task. Its boundless business empire is going to draw a lot of confusion. In this video, I attempt to break down a fair evaluation on all its major segments and explain why the overall stock is severely undervalued, and then finally give you my specific stock option play. Much of the information here is sourced directly from Sven Carlin's Berkshire Breakdown, which you can watch. I have provided a link in the description. The first item we will look at is Berkshire's very own railroad, Burlington Railroad Santa Fe. While your mind goes to sleep over the thought of analyzing an outdated railroad company, I want to make it clear that while Berkshire's investments aren't always the most exciting from a 21st century perspective, they hold a lot of value and reliability. Sure, BRSF isn't an Apple or a Zoom, but it's a business that's critical to the United States economy, and it's not going away anytime soon. Not only that, but in typical Warren Buffett fashion, this is a company that stands out from the rest of the pack with extremely low levels of debt, ready to take on any problems the industry or market may experience in the future. Warren's slow and steady ideology is a time-tested, reliable philosophy that has proven to ultimately come out on top. While other rail players keep their cash flows extremely low due to their addiction to buybacks, BRSF remains the outlier that does the opposite, and it's for good reason. Under today's hectic market, it's not crazy to believe that a fair evaluation on just this piece of Berkshire is worth $200 billion in market cap. With its 2019 profits coming in at $5.4 billion, it's completely reasonable to assume this figure. The entire industry can be used as a fair comparison, and as you can see, BRSF is a standout in many financial categories, including price to book, debt, and more. We then move on to Warren's favorite segment, Berkshire Energy. This portion of the overall business earns over $2.8 billion per year as of 2019. On top of this monstrous sum, energy earnings are growing at 10% a year. This has a lot to do with Warren's decision not to collect the dividends on this portion of the business and instead reinvest them into the company. You can see the typical Buffett philosophy plastered all over their website with statements like these. Looking over the financial sheet, you can also see that compared to other energy businesses, Berkshire's debt-to-equity ratio is extremely low, on top of the price to book being low as well. All your typical financial ratios look healthy, ready, and primed for long-term success. To help you understand just how well Berkshire Hathaway structures its subsidiaries and prepares them from gloom, we're going to look at another growing energy company called NextEra. NextEra actually has similar net earnings and grows at almost the same exact rate as Berkshire Energy, but what sets it apart is what it's growing on. NextEra grows on debt. This is an important key distinction that will make sense when we look at things from a long-term point of view. Take a look at this infamous chart of Enron. If you don't know what Enron is, I suggest you Google it. Enron was one of the largest energy companies in the world in the 90s. Now look at NextEra. The charts look very familiar. Now, I'm not suggesting that NextEra is committing fraud and is in the midst of a giant bubble, but there is something to be said about exponential growth. Guys, at the end of the day, it's very important to remember that there is no growth based on debt. We now move on to Berkshire's massive service, manufacturing, and retail sector. This is where you'll find dozens of companies involved in a large variety of sectors. There are way too many to go over individually for this video, so instead I'll break down this portion by looking at it from a more broad perspective. All of these businesses combined earn right around $9.3 billion net per year, and if we fairly attach a price to earnings ratio of 20, we can justify a market cap of $180 billion. These businesses are wide in scope and essentially make up a reflection of the overall US economy. There is lots of diversification with dozens of businesses operating in many different sectors. We now move on to insurance. If you are not aware, Berkshire is one of the largest insurers in the country. If we break down its insurance business, you're going to see just how much value this sector of the company brings to the overall financial fortress that is BRNK. Now, explaining you the complexities of the insurance industry isn't something you'll want to hear in this video. The insurance industry is filled with complex terms, rules, and regulations that will make your head hurt. What you must understand though is that the most infamous portion of Berkshire falls under this arm of the company, the vast and powerful stock portfolio that everyone loves to track and analyze. These are stock investments that are largely dictated by Charlie Munger, Warren Buffett, and a small group of directors who are playing an increasingly important role in the future of the company. Finding the value of these stock investments is incredibly easy. You can go over to the CNBC Tracker, which is a page run by CNBC that will display the publicly traded US stocks owned by Warren Buffett's holding company Berkshire Hathaway, as reported to the Securities and Exchange Commission in filings made available to the public. If we scroll down to the bottom of this page, we can see that as of today, this portfolio is valued at $241 billion. What is very important to understand when you look at this portfolio is that Buffett and Charlie do not look at this as a collection of stocks, something that they're trading, but rather that they're owning, businesses they're owning. They have always stated that they're not in the business of trading, but rather in the business of owning businesses. They don't spend their nights worrying about the minor fluctuations in prices over a given year, but rather take a 10 or 20-year approach to their portfolios, a strategy that has paid off in the extreme long term. Finally, we have the last portion, which is almost certainly the easiest to understand: cash. Berkshire is a cash hoarder. As of today, they are holding about $143 billion in either cash or cash equivalents. So for the final breakdown, we go over each of the sectors we have to review. We've got the railroad evaluation of $200 billion. Then we have Berkshire Energy evaluation of $70 billion. The giant manufacturing/service/retail sector of $180 billion. The stock market portfolio of $240 billion, and finally the cash of $143 billion, we get a grand total market cap of $844 billion. Now, as of today, the market is valuing Berkshire Hathaway right around $540 billion. That's a 36% discrepancy that you can get in on right now. So how do we take advantage of this value play right now? Well, if we take a look at Berkshire's Class B stock, it's selling for $215 per share. Looking over the options chain, we can see that most of these have wide bid-ask spreads that make them tough to buy and sell. One of the few that looks good and is far enough into the future is the $250 call expiring on January 15, 2021, selling for $125. The break-even price is about 16% above current levels. If the market is able to make about a 7% move up before December, we can make a decent amount on our return, as then we'll have some serious extrinsic value on the early move up. My idea is that sooner or later, as investors continually search for value in equities, they will undoubtedly look at Berkshire in the near term. As more stimulus is passed in the coming 2 months, asset prices, including those Berkshire owns, will jump, and so will our option. Thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed, and leave a comment if you're jumping in on this play.